Market collapse is going to be caused by bond collapse on February 13th, 2025. And no, this is not just your regular doomsday prediction. Okay, the ball is already in motion. It is inevitable that United States bond market will collapse on the 13th, which probably is going to be elaborated in the form of a failed auction. So this is not some crazy doomsday Friday 13th type prediction. The date is picked for the collapse because of a possibility, or I would actually say a high probability outcome based off everything that is happening right now, based off everything that's been happening over the course of last 12 months, that United States government bond auction will fail on February 13th, 2025. Now, as a domino effect, many sectors, many financial sectors will be completely collapsing as a result of this as well. Now, we have seen it in the early 1980s, where a 20% bond market drop caused United States market to drop by as much as 34%. Now, we're not talking necessarily a one-day type drop in 1980. As you know, the biggest one-day drop was in 1987. But it is the bond market movement that caused some severe downturns in the market back in the early 80s. And I think the history is about to repeat itself. Now, based off the catalysts that are playing out, it could be way worse than 20% bond crash that we've seen in the 1980s. This could be a magnitude to the magnitude of 30% type bond crash that we could be facing. Literally, I'm recording this on February 1st, 2025. So what I'm saying is we're days away from a bond market collapse. So let me walk you through this, exactly how this is going to play out, so you have a better understanding of this in very simple terms. So if you have not covered the last few podcasts, that would be helpful to gain a more in-depth understanding. So please review them on our 13 Market Moves YouTube channel. But the situation is quite simple, which makes this trade that I'm going to explain to you at the very end of this podcast. I mean, this is a trade that anyone can take, and it is just stupidly simple trade. You cannot make things more simple than this. So let me walk you through this. So basically, in the last few podcasts, we brought out the theme of the Great Retaliation 2025. And we said, okay, well, United States is going to place tariffs. Other countries, based on the history dating to 1929 tariff act that, brought a crazy negative type setup to the United States under Hoover presidency, 1929 through 1933. I recorded some stuff explaining you the great details of this type of setup repeating itself. This is why we also call current situation as the 1929 type setup. Smoot-Hawley tariff act was on minds of everyone that was in the financial markets back in 1929, 1933. You can do some deep searching on that if you want to get more details. But the point is simple, okay? The tariffs in 1929, 1933, it was the period of the greatest retaliation to the tariffs that United States implemented on Europe and pretty much the rest of the world at the time. The idea was simple: to make United States economy great again. But exactly the opposite happened. And, Trump has three heroes. Well, actually, he's got two, but he's going to end up like the Hoover president. So McKinley, presidency 1896 through 1901, was one of the presidents that Trump clearly looks up to. He just renamed a mountain after the guy. Mountain Denali is now Mountain McKinley. He was known as the president of war. and that's a whole nother subject for another podcast. But what you need to be focusing on right now, there were 3 presidents in the United States history that were highly in favor of tariffs. One of them was Reagan, one of them was McKinley, one of them was Hoover. Okay, now clearly Trump does not want to go down in the history of all presidents as Hoover, because he's considered to be one of the worst, arguably indeed one of the greatest, but his policies were total shit, and that's exactly what's happening again. So Trump would like to go down in history as a better version of Reagan or McKinley, but unfortunately he's going to go down in history as a worser version of Hoover. So if you understand that, then you will understand the great retaliation setup that we're looking at right now. Basically, when the whole world retaliated to the United States tariff policy around the world, everyone placed the tariffs in retaliation on all the stuff that United States was consuming from around the world. So we already see it happening. Okay, Canada is retaliating, China is retaliating. Okay, Trump made it quite obvious he is going to tariff the hell out of Europe as well. So Europe is going to retaliate. So it's the great retaliation of 2025. That's when I said the ball is in motion. Okay, now the great retaliation part that nobody apparently has calculated yet, and that is the reason why you come to the 13 Market Moves podcast, is to identify these trends before they are fucking obvious. Like the Bitcoin drop that's happening now that nobody saw for whatever reason in the last 2 weeks. Well, it's fucking happening. And what I'm telling you is going to be happening next has got even a higher probability than the Bitcoin drop. So, back in, if we look at the history, 1986 through 1901, 1929 through 1933, 1981 through 1989. Okay, United States debt to GDP was nowhere where it's at right now. I mean, 80s was definitely one of the time frames where it rocketed higher. But what I'm saying is the situation when it comes to the bond market was nowhere nearly as bad under McKinley or Hoover or Reagan. So you got to look at the setup. The setup now is such that United States is running some substantial trade deficits. It's running substantial budget deficits, and it's at the level of 36 plus trillion when it comes to the bond market debt. And under such conditions, the last thing you want to do is tariff the fuck out of the world, because the greatest part of retaliation is not the fact that Canada places a 25% tariff on stuff that United States exports to Canada. It's not the fact that China may not import some stuff from the United States. It's not that. But the great part of retaliation is the fact that the whole world is about to dump United States government bonds. So let me break it down in a simple way. Okay, so what's happening right now? Okay, look at what Canada is buying from the United States. Well, they're buying cars, all right, machinery, minerals, plastics. Cars, machinery, minerals, plastics. Hold on a second. None of these are like existential threat to Canada or anything like that. All of these things, cars, machinery, minerals, plastics, all of this shit, guess where Canada can start buying it tomorrow? Where can they buy it? Canada can buy this shit from China. A lot fucking cheaper than what it's been buying the shit from the United States. Oh, let me elaborate this just a step further, okay? Canada can get all of this stuff if it goes to BRICS countries, right? BRICS, meaning Brazil, Russia, India, China, Saudi Arabia, Indonesia, and these countries are joining BRICS at the speed of light. So before you know, if you need something that maybe you couldn't get before on preferential conditions such as like zero tariffs. Well, guess what? Pretty soon there's going to be another country that's going to be joining BRICS where you're going to be able to get this from without any bullshit. So the easiest solution for Canada is to do what? Well, okay, you're going to tariff the fuck out of us in Canada. We're going to tariff the fuck out of you in United States. But who does this hurt more? When you look at the domino rollover effect, okay, it's the United States that gets hurt the most because of the fucking bond market, damn it. So let me take this explanation just a step further. Okay, so basically, it's not a big deal for Canada to replace everything it's currently buying from the United States. But it is a bit of a fucking problem for United States because now you're talking about oil, gas, energy sector, electricity. Well, shit. I mean, talking about all that, okay, at the same time when, Trump is pitching drill, baby, drill, but nobody actually wants to drill more because they're like, well, shit, I mean, at these prices, we don't want to drill. It all boils down to the cost, okay? Canadian oil is being produced at a cost of like $38, okay? Oil that comes out of the Middle East, some of the big players, they extracted it at even a lower cost, like $20. Russia extracts oil at like $41. Any oil that recently is the cost in the United States is like above $60. So the average cost would be like $63, $65 is the cost of producing a barrel of oil that results through the fracking mechanisms that are used in the United States. So the rest of the world is able to produce oil at a much lower cost, but the United States can't. So that's why oil prices need to be maintained at a much higher level for the companies in the United States to be productive. And that is why oil cannot be going below, 60, below 65. That means that the whole United States energy market is taking a hit. But the point is, if Canada takes away oil from the United States, takes the electricity away from the United States, sure. That creates a huge domino effect by itself. But if Canada gets pissed off to the point where it's doing that, okay, and regardless of whether it's going to do that or not, okay, which is a whole set of domino effect for the energy sector, because the United States cannot replace that within the next day. It's going to take months to replace that. So we're possibly heading into a big energy crisis. But the biggest outcome of the domino effect is this. Canada holds over 300 billion, close to like 350 billion in United States government debt. Now, a country would do that. The reason why foreign countries hold United States government debt is because they are intending to do more business with that country. So I spent an hour detailing the Chinese holdings of U.S. government debt, which since 2018 literally went down close to half of what they were. China used to hold over 1.2 trillion in United States bonds, and most of them are short-term bonds because China is doing such a huge volume of trade with the United States. Okay, but since 2018, they have been reducing their holdings of United States government bonds. So from like 1.2 trillion, China currently holds maybe like 680 billion of United States debt, which basically tells you that throughout last few years, China intention to do more trade with the United States is simply not there. So who is China looking to do more business with? Well, it's all the BRICS countries, okay, because they don't have to deal with all the bullshit. They don't have to deal with all these tariffs. They don't, like, they do business where business is done with a benefit to them. And they don't have to worry about this type of situations with basically another country tells you what the fuck you got to do. Nobody wants to deal with that shit. So the great retaliation lies in the fact when you're looking as far as U.S. government bonds, when you're looking at doing less business with the United States, you are going to reduce your U.S. government bond holdings, which China has a clear pattern of doing that since 2018. And Canada, however, has been increasing its holdings of U.S. government debt, but considering current conditions, that we have a high probability that Canada will say, well, fuck it. We'll stick it up to the United States. Why don't we just dump the fuck out of U.S. government bonds? Okay, because we're not looking to do more business with the United States going forward. We're looking to do less. They're tariffing us. We're tariffing them. We're going to do less business. As a result, they're going to do more business with BRICS countries like China. Okay, what do you think that's going to do to the United States bond market? There's going to be a supply of bonds at a moment. Supply meaning sell pressure on bonds at the moment where United States can't really fucking afford it. They have to raise the debt ceiling again. They have to sell more bonds. And yet it coincides with the time frame where now every country in the world wants to sell more bonds. Now, Mexico is a lot smarter than Canada. They don't hold nowhere near as much of U.S. government debt, but it's still a good bit. And what does Mexico buy from the United States? Well, they buy steel, iron, paper, wood, sugar, glass. What does that mean? Well, it's basically everything Mexico can now buy starting like tomorrow. It's basically everything that Mexico can begin buying from big BRICS countries, again, from countries like China, India, Russia, so on. Okay? And what about China? What do they buy from the United States? Meat, salt, glass, paper, sugar, wood. Like, look, you know how crazy this is? Like, one of the last few countries that joined BRICS is Cuba. Do you think that Cuba does not have enough fucking sugar? Okay? Like, why would China and Mexico buy their sugar from the United States? They can go get it from Cuba. It's close. It's close as hell. Just go to Cuba. Get your sugar from Cuba. And once that transition takes place, okay, guess what that means? All right? Well, no longer does Mexico and China need to have as much government bonds. Basically, for those of you that don't understand the correlation between the amount of bonds that a foreign country holds, most of the countries that are looking to do a lot of business with the United States, they hold a lot of their money in bonds, in short-term bonds, because they know, like, hey, we're going to need to put this money somewhere. We're selling a lot of stuff to the United States. We need to put money somewhere. Let's just put it because we may need to reuse it. It's like instant cash flow. They hold these bonds 3 months to 12 months to 3 years to 5 years to 10 years. So most of them, however, when it comes to trade, they're like short-term bonds, 3 to 6 months to 1 year to 2 year type thing. And so a lot of these foreign countries that are not looking now to do as much business with the United States, they have no reason to hold on to these bonds anymore. So they're going to dump them. So let's look at the actual numbers. So as I mentioned, China is holding about 680 billion, Canada 350 billion, United Kingdom is one of the big ones, all right, 680 billion. Now, I mean, it used to be United Kingdom used to hold like 400 billion. Now it's at 680 billion. Okay. At the same time, China within the same time frame went from 1.2 trillion to 680 billion. And guess who else is on the list? It's like the top dogs. I mean, this could be a shocker to some of you. Taiwan, damn it. And if Trump is going to tariff Taiwan, which is basically he already said he's going to do, okay, then what interest would Taiwan have in holding these bullshit United States government bonds? Taiwan is going to be dumping U.S. bonds as well. So, because Taiwan is going to be doing less business with the United States because of the fucking tariffs, not more. So between China, Canada, and the reason the United Kingdom is there because, I mean, he said he's going to tariff the fuck out of Europe too. So that's why. I mean, we don't know the details, but based on what he's been saying, it's probably going to also be between 20 to 30%. So when we take the combined look at these countries, which, by the way, does not include other European countries, because we don't know how the tariffs exactly going to impact them, the size of them, but like Belgium, Switzerland, Ireland, that's another 900 bill combined. Now, there's only one country that is not on the list, that's not been making the headlines yet, but it wouldn't be a shocker, okay, if it did make the list of the countries that would tariff the fuck out of, because historically it already happened, and I'm talking about Japan. The country that's going to get fucked the most besides the United States as a result of everything that's happening now is going to be Japan. Japan is stupid enough to hold 1.1 trillion still of United States bonds, which are going to be crashing in value, okay, by 20-30% come February 13th, okay? So Japan is going to get screwed, okay? Japan is going to get completely screwed in this situation, all right? And guess what? Why do the tariffs on Japan are not so far out of line? Well, Trump loves Reagan. Who tariffed the hell out of Japan in the 80s? Reagan. So, okay. And Japan is, one of the, it is the number one big foreign holder of United States bonds. So let's not discount the amount of stupidity that is happening. And let's not discount the fact that Japan could be joining the list of countries that could be dumping a substantial size of United States government bonds. Now, but if we take Japan out of the equation for now and just run some basic figures, okay, even though these numbers are pretty big, amounting to 2-3 trillion roughly, depending on which countries you put in here, depending on exactly what the tariffs are going to look like on Europe. Combine those numbers, and they're about 25-30% of all U.S. government bonds. So when you look at a number like 25-30%, it don't seem like it's a big deal, okay? Until you realize what is the composition of these bonds. Meaning, bonds vary anywhere from 3 months to 6 months, known as, U.S. Treasury bills, 10 years, 20 years, 30 years. Again, as I've been trying to make a point in this explanation, most of the countries that do a lot of trade with the United States, they hold the short-term bonds. And the auction that is coming up on the 13th of February, 2025, is mainly addressing the shorter-term bonds. And so when we look at the composition of total foreign debt in relation to the total bonds outstanding, we're talking about 25-30%. But then when we look at the total foreign debt outstanding in relation to the short-term duration, okay, we're looking at a significantly higher percentage. So basically, if we, to break down the numbers, there is a possibility, let me just get down to the fucking point here, that about 5 to 8% of total short-term bonds will be dumped over the course of the next 2-3 weeks. Now, that number could be as high as 10 to 15%. But let's just go with this lower figure of 5 to 8%. I know it doesn't seem like a big number, but only think. Just stop for a moment and think. If on a single day, a single week, let's say you're trading Apple, or let's say you're trading Amazon, or let's say you're trading Tesla. Imagine if on a single day or single week, 5 or 8% of total shares outstanding all of a sudden were dumped on the market. What do you think that's going to do to the price? Guys, we're talking a 20% drop easily. We could be looking, again, depending on how you slash these numbers and exactly, how you look at which countries will dump and percentage of what they could dump, which I estimated, they could be dumping anywhere from 20-30% of their bonds. Guys, the impact could be humongous. I mean, we could have one of the biggest drops in the history of the financial markets. That's how crazy it could get. Now, it does get better from the standpoint of trading if you understand that, hey, you can make some money on buying calls occasionally, okay, especially in the bull market, but the wealth is made on shorting the market. The wealth, you make a little bit of money on the bull side, you can make real wealth on market collapses because, you could put a very small size capital to go 100x, 200x, 500x if you understand the time frame of when things are happening, if you can utilize a simple put option strategy. So in this podcast, I just gave you the time frame. Okay, this whole collapse in the United States government bond market could be taking place over the next 2 weeks. Now, it could begin this week. Clearly, I mean, the market's going to be open Monday, the 3rd, the 4th. I mean, we're not talking we're talking about a very steep time frame, meaning things could begin falling apart at a rapid pace, and it could be the moment of the market completely breaking could be on February 13th, 2025, because that also coincides with the United States trying to sell about 100 billion of bonds. So not only do we have pressure from all these foreign holders of United States bonds that are going to be dumping. They're going to be dumping this week. They're going to be dumping next week. Okay. And that's going to drive the demand. When this week is going to be a great barometer of how bad the situation could escalate. But ultimately, we're looking at a situation where supply is going to overwhelm demand. And the very day of that happening, that could go down in history as the official collapse of the United States bond market, could be on the 13th of February, because not only you have all these foreign nations who now have very little interest in holding as much of U.S. government debt, but now you have the government itself also creating extra supply. At the moment where anybody that possibly would have considered participating in the next auction, that could be saying, hey, man, I was going to buy some U.S. bonds on the 13th, but I don't know, man. I think I'm just going to wait out. Okay, so basically you have a situation developing that on the 13th of February 2025, you could have the amount of bonds that are being offered for sale actually not being matched by the number of participants that want to buy this crap. And for the first time in the recent history, you could have a situation where nobody fucking wants U.S. bonds. And that's how bond market collapses. Now, if the bond market collapses, it is a domino effect. Stock's going to collapse. Guess which companies are going to collapse the fuck out? Now, as I mentioned, the number of foreign holders, like all these countries that I brought to your attention so far, they hold about 25 to 30% of the total U.S. bond market. Now, who has the rest of it? I've spent about 50 minutes in one of the recent podcasts breaking down how it's Apple. Apple holds more fucking bonds than the Federal Reserve. Okay? Apple holds... I'm sorry. Apple holds 115 million. Federal Reserve holds 190 billion. Berkshire Hathaway holds over 250 billion at this point. Why do you think on certain days Berkshire Hathaway should have these big ass red candles on the chart? And those candles coincide with the day when bonds are dropping. Berkshire Hathaway exposure to the United States government debt is fucking through the roof. So it's like you got Apple and Berkshire, okay, would be the equivalent of the entire country of Canada. So you have a lot of private companies like Microsoft, Meta. Fucking Meta holds as much of United States government bond as the whole fucking country of Mexico. Okay, so you got all these big players, the big seven names, the big tech names, okay. They tell you when you listen to the news, oh, but this guy, man, my God, they got so much cash. No, they don't have cash. They have fucking trash, which is United States government bonds. So most of you are going to listen to this message and you're going to say, hey, Leo, this is bullshit. None of this is going to happen. United States bond market is not going to collapse. As a matter of fact, how bad could things get? Well, I'm telling you how bad things can get. United States have never defaulted on the United States government debt, but it's also never had a situation or the current setup. I would say the 1929 type setup, which is now in 2025. I would say the situation is way worse than 1929 type setup because of the composition that you're looking at. It's the 36 fucking trillion. Okay, it's the biggest trade deficit, the biggest budget deficit, the biggest everything. When you say make America great again, goddamn, we didn't know there was we're the greatest. We made it great again. We got the greatest budget deficit the world has ever seen. Make America great again. We got the biggest foreign indebtedness to the magnitude of 36 plus trillion. We are the fucking greatest. Okay, so, when you look at the greatest from that standpoint, okay, I guess United States is the fucking greatest because nobody else has got it like that. But guys, this shit is about to fall the fuck apart. And what I'm telling you, the trade is simple. Yes, you short U.S. government bonds, okay, but you also short some of the biggest United States companies because they are the ones that are holding the big bag of United States government bonds, which are about to fucking collapse over the course of the next 2 weeks. And the problem does not become really a huge problem for the companies that hold them on the balance sheet until they begin selling them. And they have to sell them, especially the short-term government bonds. So it is the spike in the yields in the short term. Like we're talking about when these countries are going to go dump the U.S. bonds. They're going to dump the 3-year treasuries, the 3-month treasuries, the 6 months, the 12 months, the 2-year, the 5-year. Those short-term rates are about to go to the moon as the world greatest retaliation will resolve in a bond collapse. And what does this mean for the housing market? What does this mean for the automotive industry? Okay, not only you just raised the cost of everything being sold in the United States by 25% at the minimum, but now you just, as a result of also doing that, okay, the yields are about to go to the fucking moon, and that increases the cost of borrowing, that increases the cost of your mortgage, that just when you thought, like, how much higher can the fucking mortgage rates go? You wait and see. These mortgage rates are about to go to the fucking moon. It's 1980s all over. Guys, interest rates, yields are like around, 4.5 just under 5% recently. You haven't seen the beginning of it. In the 80s, okay, interest rates were as high as 15%. Mortgage rates were as high as 21%. You're about to revisit that. But the situation now is way worse because, again, of the setup. It's the $36 trillion setup that makes the U.S. interest rate payout just to service the interest rate payout. It becomes, the 15% rate that we had in the 80s would be an equivalent of probably 25 to 30% rate. And if you try to service a government debt of 36 trillion at 25, 30% arguable rates, guess what that spells out? It's the D word, man. It's the fucking default. Now, you're going to say, but Leo, but it has never happened. The United States never defaulted. Well, watch and see. This shit could be way worse than anybody ever fucking imagined. So, short the U.S. bonds, how do you do it? You short TLT, or a better way to do it would be actually to use, not TLT, clearly, with trade options here. So you would buy put options on TLT. All right, that's the simple trade. Now, a better way to trade options would be on ticker /ZB, which is the United States bond futures. And so you would be buying options directly on U.S. bond futures. That's a much better way to trade it. Now, again, most of you don't even have your account set up correctly to do that. And that's why you need to get in touch with us today here at 13 Market Moves by going to 13mmtv.com. Get in touch with the coach immediately, guys. You're looking at one of the greatest trades of your lifetime. And clearly, there are multiple variations of this type of trade that is a correlation type trade. But one of the easiest things, guys, to do, clearly, you short the big seven. It's the big seven that holds most of the United States bonds, which are about to drop in value by 20, 30%. For those of you who don't remember that, Silicon Valley Bank collapsed as the result of, well, they had a big bag of United States government bonds. And when the United States government bonds dropped as a result of yields going higher, well, Silicon Bank had to sell some at a 20, 30% loss, and that's how they got fucked. So I think a lot of banks are going to fail that are really just under the radar right now. And most of the trades people associate, well, it's the Republicans, they're going to deregulate the industry. But like, none of that shit matters. Banks are in deep fucking trouble, okay? You got hyperinflation knocking in the door. You got bond market collapse in the next 13 days. You got shit that you're looking at. The setup of it is actually fucking unbelievable because we have never ever seen what's happening now in the world's history. So this is one of the greatest moments to create wealth if you understand the instruments to use, how to short it, expirations, strikes, everything. Guys, all you got to do is call 13 Market Moves today. Sign up to trade with the coach. And I guarantee you, you will catch one of the biggest trades of your lifetime over the course of next 2 weeks. Let's fucking roll. 13mmtv.com. Click the big orange button. Whew. Some wild shit about to happen. Let's roll.